Hi there. In this presentation, we will talk about another topic, which is a smart contract. And I'm very excited about this topic because it takes the concept of ledger that we created in accounting and put it in the digital space, which we call it decentralized ledger. What is the idea of ledger? Ledger is like an account, like the bank statement. What you see in the bank statement, cash coming in and cash going out, and then the balance at the end. This is the very brief meaning for a ledger. In the smart contract, we have this ledger in a decentralized area, which means every person has a part in this ledger is able to see the whole ledger. Let me give you an example. So for example, if we have a manufacturing company is getting material from a supplier. So in the smart contract, we see the manufacturing company has a copy from the ledger, the supplier has a copy from the ledger, and the carrier has a copy from the ledger. And the same ledger is exactly among all of the people. It means nobody can play with this ledger, and this ledger is self-executed, which means once the transaction happens, I don't have a centralized authority to make any changes. This contract itself executed by itself. Why? Because it is programmed by a programming language called Solidity, which I'm going to show it to you. And this is the whole idea of a smart contract. So with this in mind, let us jump into the presentation about the smart contract. And if I would like to make a definition for a smart contract, I say a smart contract, it's a self-executing agreement written in code because it's written by a cryptographer language and stored in a blockchain. What do I mean by blockchain? I will explain it later in this presentation, but in brief, it's blocks of data connected together. And we cannot break it because if we break the chain, then there will be no contract at all. The good thing about the smart contract, number one, it's automated. So because it is automated, it's fast. It has a lower cost because I don't need overhead to hire a person to do the contract. And it should be free of fraud or error because the same ledger showing up before all the people who are participating in this blockchain. So the four components of the smart contract, number one, it's automated in the execution. It means automatically it works. You say, how does it work? For example, when we have the smart contract written by a cryptography language, everybody is participating in this contract will be able to see. So let me go back to my example. When the supplier is sending the material to the manufacturing company, usually there is something called Oracle that provides services to the smart contract. Oracle, it's a third-party service, for example, like the GPS, that can read the barcode on the material moving from the supplier to the manufacturer. And once it reaches a zip code where the manufacturing company is located, the GPS will send the information to the smart contract, say the material has been delivered. Automatically, the smart contract will be self-executed and the payment goes to the supplier. So the supplier and the manufacturing company has no power to control the payment or the material. So it's self-executed, decentralized. It means we don't have one person or one bank or one regulator to control this contract. It's decentralized. The same contract, a copy from the same contract is available for everybody on the blockchain. It's immutable, it doesn't change. Tamper-proof, it means we cannot have any kind of fraud or error on this contract. From the auditing side, this contract is wonderful because as auditor, I don't need to come and audit the contract and see whether the contract has been executed or not because it runs automatically and it is observed by everybody on the blockchain. So everybody on the blockchain is able to audit the contract. If one person tries to manipulate any information, the other people on the blockchain will prevent it because it's not matching with their contract. This will make it faster in the execution because it's automated, it's secured, transparent. So this will streamline the workflow, speed up the transaction, reduce or eliminate the error or fraud. Those are the key components of the smart contract. Now, let me take you back into the history of the smart contract. Where the smart contract is coming in history, it comes between the breakthrough of AI and before the evolution of the Bitcoin. It came back in 1994 by cryptographer Nick Szabo. And this guy, he's like a computer science engineer. And it came actually after the adaptation of the breakthrough in AI. So with this in mind, let me take you here to those three genius people, like they took AM Turing Award. And here back in 2018, those people are very well known. The award came in 2018, but those people have been in the field for quite some time. The first one is Yann LeCun. And Yann from France originally, as you can see here, his biography. And he is the electric engineering person. And he is well known in that field. And he came together with Geoffrey Hinton, and the third one, Yusha Pinjo, and Yusha Pinjo from Canada, and Geoffrey also from Canada. And those people, they work together to make the AI revolution, even if in 1990s, the AI was not really populated as we can see right now. Why? Because people were afraid about whether this is going to work or not. But this is the idea where the AI came out into existence. And after that, Nick Szabo adapted the idea of AI and tried to come up with the concept of using a smart contract, because a smart contract doesn't need a bank. A smart contract doesn't need a regulator. A smart contract is built on a blockchain. The blockchain is secured and observed by all the people participating in the blockchain. And this will reduce the reliance on a third party or intermediary person to control the contract. So I put here the link for Nick Szabo if you would like to watch it. And if you search it on Google, Nick Szabo is very famous character. And some people, they say Nick Szabo is Satoshi Nakamoto, who came up with the white paper in 2008. And some people, they say it's not. But the Bitcoin actually made the path for a smart contract to be famous and populated. So the idea of a smart contracts came before the blockchain, but the Bitcoin and the blockchain, when they came out, then everybody was able to embrace the concept of a smart contract. While the concept was intriguing, its implementation was hindered by technological limitation. The advent of Bitcoin in 2008 by the white paper that came out by Satoshi Nakamoto was actually paving the ground for the smart contract to work out. What is the blockchain? As I said, blockchain, it's blocks of data together, encrypted by Solidity programming language to make, like, if you could say, a ledger or a bank statement to make it easy for you to understand. This bank statement is maintained by the bank and the person together. In our scenario, the same ledger is maintained by the manufacturing company, by the carrier, by the supplier, by everybody participating in the blockchain. If we need to add a third or a fourth person to the blockchain, we add it, but we cannot restructure the blocks. Otherwise, the blockchains will not exist anymore. A consensus protocol ensures that all computers agree on the same version of the smart contract. So if I have like three parties, manufacturing company, carrier, and supplier, all of them, they have a copy from the smart contract. We cannot have one party to make any change unless it's approved by everybody. So this makes our auditing on the smart contract an easy job. And this is what we call it in auditing, continuous auditing, because everybody is able to watch the smart contract all the time. So in this screen, I'm going to explain to you again what is a smart contract. And in the coming screens or the coming slides, I will explain what is not a smart contract. The smart contract, it's a program stored on a blockchain that automatically executes when certain predefined conditions are met. Good example, the delivery of the material from the supplier to the manufacturing company. If this happened and the information came into the smart contract, the payment will be released to the supplier. They enable multiple parties to automate the enforcement of the agreement. So the supplier doesn't ask the manufacturing company to release the payment. It's automated here. And the carrier doesn't ask the company to pay the fees for the fees for the DHL or the UPS, because it will automatically be released to the carrier as well. Smart contracts are typically written in Solidity. And I put here the soliditylanguage.org. And as you can see, Solidity, it seems very close to JavaScript. It's meant to be for a smart contract. And it runs on Ethereum, which is the other platform that came after Bitcoin. And I encourage you, honestly, that if you would like to know more about this one, to navigate the website and learn something about this programming language. So this is what we mean here by the programming language. So this is in brief a smart contract. On the other hand, I cannot say the smart contract is smart by our language as human being. Smart is not the contract by itself per se is smart, but the smart means the contract will be self-executed based on the data feeds that came from Oracle or any third-party services. On the other hand, I told you in the previous slides that it is immutable, but now with the new architectures that are being developed, there is some kind of changes might happen to the contract. Additionally, some blockchain are experimenting with new kinds of governance. When I talk about here governance, controlling the contract and changing the policy, which means the smart contract can be changeable. And of course, this might lose the confidence of in the smart contract if things are changed. But sometimes it might happen that some protocol might happen to the smart contract and it change. I told you that the smart contract can run on a blockchain, but it also can run in closed trust ecosystem, which might happen between a company and the subsidiaries. So we might have this one, which is not open for public. The last one, the smart contract, are not necessarily legally binding. And this is what we are struggling with, that now if this smart contract is on the blockchain, what are the regulations that can control the smart contract and the penalty if somebody didn't fulfill its obligation towards the smart contract. A smart contract are not just legal contract written in code, even to the extent that they don't arguably represent contract. Official recognition of a smart contract differs because it's a contract on a platform. So we don't have paper, but we have a code that we can review, and we consider this code as the law that controls the smart contract. So there are some concerns about it, but it doesn't mean that the smart contract is not well accepted in our daily life. It is. The objectives of the smart contract is to make it easy, automated by itself, eliminate the need for central party to execute it, and honestly, smart contract gain its popularity after the economic recession that happened in 2008, because in this year, the people start to lose the trust in the financial intermediary like banks. And because of that, the Bitcoin came out to make the transaction enforceable through the digital platform by the smart contract. And by doing that, people can trade with each other without any need for banks or third party. A smart contract established a new foundation of trust by removing the reliance on intermediaries, which I mean here the banks. So the people, they don't trust the banks anymore, which I call it trustless infrastructure. Because of the economic recession and the whole story of 2008, and it came back in 2012. And because of that, people, they start to lose confidence in the intermediaries and start to look for an alternative to do trading with each other without any control from the banks. Because of that, there is a new generation of application that works on the smart contract called dApps, decentralized application, which I'm going to explain it in the coming slides. And here we see how the smart contract works. Usually we have organization. This organization, we call it Decentralized Autonomous Organization, DAO. And if you search on Google or if you search in any platform, you will see a lot of information about the DAO. The DAO, it's a type of organization that is governed by rule encoded in the smart contract. A good example for this DAO, like the companies, they work on projects like fundraising, governance, decision-making. And the fundraising here, people, they raise fund for a charity, for government, they raise funds for different purposes. So here we need an organization that control this process. How can we do that? We make the decentralized contract. So the fundraiser and the donator, those who are giving and receiving the money, they have a contract. So once the money comes to the fundraising company, the fundraising are obliged to spend it on the purposes that came from the donor. So by doing that, we make a decentralized agreement that both the donor, the fundraiser, and the recipient of the donation, all of them, they are able to see the contract. To do that, we use the decentralized application or dApp. dApp, it's a decentralized application software. Excuse me. A decentralized application that runs on the blockchain is typically built using a smart contract. So remember, the dApp comes on as the third layer here for a variety of purposes like decentralized finance, gaming, social media, and so on. So let us talk about those three in brief. First, the decentralized contract. It's a programming instructions run on the blockchain. Excuse me. Machine to enable the transactions or interaction. So the contract here, it's a programming language that develops instruction that can run into the contracts. Examples include revenue sharing or value transfer. And good example, as I said, the fundraising. When the donor is giving money to the fundraiser is spending the money according to the instruction that came from the donors. We can use also smart contract for prediction. So a good example, if I go to a horse show, I can make a smart contract that if this horse win the race, for example, or win the show, then I will get this one. And they use it, for example, for gambling as well to predict, or fluctuation of the shares. I expect if the share price goes up to that amount, let me sell the shares. So I make a smart contract between me and the broker, telling him if the share price, as I predict, goes to that one, do the sale transaction. If it goes down, make a purchase. So we can use the decentralized contract for different purposes. And for that one, we use the applications, which we call it decentralized applications. The decentralized application, or the dApps, a software program that leverage the smart contract. So to make the smart contract easy to apply, we can make application for that. It enhances the decentralization, transparency, and immutability. Good example for the dApps, the blogging platforms, cryptocurrency gambling, we can use it in gambling, prediction market like the share price or the stock market, decentralized exchange like the exchange rate among the currencies, or the cloud storage. So we can use the dApps based on the smart contract to facilitate the transactions. The organization itself, it's the whole system that embraces the smart contract. It's a software-based organization with decentralized governance, often utilizing blockchain technology. And I will talk about the blockchains in the coming 2 chapters to automate the process and manage decision making. The DAOs operate on a predefined rules encoded. DAOs are very famous, by the way, in having so many smart contracts under their organizations. And they work in huge amount of capital, leveraging their software to use a smart contract and try to make governance over those smart contracts. So while DAO hold the promise of greater transparency because they control the smart contract, efficiency, the speed of executing the smart contract, democratic participation, they also face challenges like governance. Who has the final control over the smart contract? If I say the smart contract is monitored by all the people on the blockchain, so who has the final governance or control? Adaptability and legal consideration. Until now, the smart contract is going through the process of regulation from the different regulators, trying to put some regulation in case something happened to the smart contract, who will be responsible for that? So this is in brief the smart contract, as I said, the definition, where it came in history, how it works on DAO, and what are the dApps that use the smart contract. Now let us talk about the technical foundation of a smart contract. As I said, the smart contract rely on cryptography and ledger technology. Ledger, as I said, like the account between the manufacturer, the carrier, and the supplier. The good thing that it is programmed. Number 2, encrypted cryptography, which means that there is some kind of code that will control the execution of this contract. This gives us confidence that if somebody tries to tamper or manipulate the contract, it will show that all the other contracts don't have the same version as this one. So this will give us some kind of security and transparency. The blockchain infrastructure for smart contract, control of digital assets. And here when I talk about digital assets, good example, the Bitcoins, and digital services or goods like copyright, like patent. So can we use a smart contract between the patent inventor and the company that has Bitcoins, where the person will give the patent to the company and in return take Bitcoin? Here we can pretty much use the smart contract because blockchain enables secure, verifiable ownership of digital assets. Good example, the Bitcoin, for digital goods or services like patent. But now they are trying to expand it to make it even for real world assets like cars, building, land, and we can use the smart contract for it. So this is where it came from, and now it's expanding to cover other forms of assets. The automated code execution are coded programs that are executed automatically on the blockchains. Once the data came to the blockchain, the smart contract will be worked or executed. The good thing that we have evidence, proof of work and proof of stake to ensure the integrity and the security of the blockchain and the smart contract. So the smart contract, it's very good because, as I said, it shows the same ledger among all the people participating in the blockchain. And when the data comes to the contract will be self-execute. Now let me step backward and tell you how the smart contract came into life, the technological foundation that came into the smart contract life. It's actually the EDI, the electronic data interchange. You might cover this one in cost accounting and managerial accounting because it's a very old structure where the manufacturing company and the supplier of the material, they have a database where the manufacturer company use the material for production. When the material stock goes to a certain level, the software will send a request automatically to the supplier asking for more material to come in. So the electronic data interchange, it's a software between the manufacturer and the supplier, where both of them, they see the inventory level. When the inventory level goes down, it gives an automated purchase order to the supplier to send. And once the supplier sends the material to the manufacturer company, the system automatically make a transfer to the supplier, but using a bank here. From here, the EDI was the key foundation for the smart contract. So Nick Szabo, when he came up with this vision, he says, okay, if I have EDI between two different parties, why don't we expand it to be among maybe 10, 20 different stakeholders? And all of them will see the same structure of the smart contract. And this was the foundation, by the way, for the smart contract. The smart contract, when it came in 1994, the next step was Bitcoin. But the bad thing, I don't think it's bad, but limitation. The limitation came in Bitcoin that it supports only 100 programming functions. And one of the functions, like I say, print. When I say print, it's a function used in the programming language. Bitcoin came with 100 functions, but Ethereum came later on, I think in 2014, with a huge, any conceivable program. And this was much broader than Bitcoin. And because of that, Ethereum embraced the smart contract because we can put as many functions as we can on the smart contract. And then they use Solidity, which is the programming language for the smart contract. Because of the course time, I don't have time to dive into Solidity, but I encourage you, if you get time now or after the course, to go into this programming language and learn something about it. What are the barriers that came across the smart contract? Number one, regulations. Once we come into the digital area or the cyber area, we have a big issue about regulation. Because I keep telling you about manufacturer and supplier. That's fine. But what will happen if the manufacturer is in the US and the supplier is in China? We could have a smart contract between them. But now if something happened to the contract, by which country we should be regulated, by the US or China? And from here we came with the issue that we say there is a huge difference, because once you come into cyberspace, there is no boundaries, no jurisdiction. I can make a smart contract while I'm in the US with somebody in Australia. Who should control it? Who should regulate it? A smart contract is also decentralized. It's not because I made the smart contract in the US, the contract will be regulated by the US government. It doesn't have to be, because we have so many stakeholders in the smart contract, and we say smart contract being decentralized and automated can be challenging to regulate. Number two, the Turing vulnerable contract, and I will explain to you in the coming slide, there are some vulnerability, because once you come into coding, you might have some attack, malicious code that comes into the contract, and then it gives the wrong signal to the contract to execute. And some people, they are still afraid about the smart contract because of this. There is some vulnerability that could come to the smart contract, and then the contract will execute without actual exchange of any asset or service. The third one is the Oracle problem. The Oracle problem here, Oracle, it's a third-party services that gives data like the GPS. It gives data to the smart contract that something happened. So for example, if I live here and I delivered some goods or services to somebody in Mexico, the GPS will watch the movement based on the barcode that I put it and the zip code where it should go to. And then once the goods arrive into the buyer, then the GPS will tell the smart contract that the goods have been delivered. So automatically the money should come to me, or the Bitcoin should come to me. But here is the point. What will happen if Oracle, the third-party service, give the wrong information? We cannot control the Oracle, by the way, and this is the reason we call it Oracle problem, because Oracle brings the data from outside the smart contract boundary. So smart contract rely on external data to function. The reliability and security of the data source as Oracle is crucial for the integrity of the contract. But sometimes we might get wrong data, and then we end up making a wrong transaction. So I will take each one of those three barriers and explain it here. The regulation here, for example, one of them is the regulation for the public offering. If you remember, like some companies, they can go from private into public, and they make initial public offering where they put their company into the market, and they issue shares. But for the digital companies, they have initial coin offerings, and the lack of clear regulatory about this one, the crypto assets, the token, the initial coin offering, passes significant risk. Once we come into cyberspace, still the regulatory system is not mature enough to embrace this new asset or this new entity and try to regulate it. Shall we call initial coin offering like shares or commodities? It could be, but still, it doesn't have the same structure as shares. And because of that, the ambiguity in the regulatory body is still raising some concerns for the regulation. Companies pursuing a smart contract use cases must carefully assess the regulatory risk, consider the implication on the business. Because of the concerns from regulatory body, sometimes we might not be able to expand in the market because people are afraid. They might lose their money. They might get some malicious code into the smart contract and lose their reputation as well. So because of that, because of the lack of mature regulation, people still, they have concerns about the smart contract. The second one, the Turing vulnerable here, and I thought it's good to show you a good source, which call it here, like I hope you are able to see the link. I put it here, a smart, or you can put it in Google, smart contract vulnerabilities, types and how to prevent them. What are the vulnerabilities that might happen to the smart contract? One of them, as you can see here, the re-entrancy. Re-entrancy here, it comes from hacker who try to re-enter some codes to let the smart contract runs without any actual delivery of anything. Gas griefing, which you can see it here, gas griefing, which is the fees we pay it every time to the smart contract whenever we make any kind of transaction. Another one, integer overflow or underflow, and this could happen in the blockchain platform. And we try to put the code that can protect the overflow or underflow of the digits. Also, denial of service, unencrypted private data that can actually steal the private data because of the lack of encryption. So I encourage you, if you get a chance, is to take a deep dive into a smart contract vulnerability. And because of that, like here, for example, also in 2016, the DAOs, a smart contract, suffered an exploit. So even the DAOs had a big attack that resulted in a loss of $52 million due to programming errors. So there is some kind of errors or fraud or malicious attack that might come across to the smart contract. The last one, the Oracle problem, and this is what I said. Oracle is actually taking the data from a third party and pass it on to the smart contract. And I thought it's good also to take a look on this website. It's actually an article came from magazine by Cointelegraph, trying to explain what do you mean by Oracle problem. And also you will find this one in the textbook, and how the Oracle might send incorrect information to our smart contract, and this will raise up the execution of the contract. The other thing, maybe Oracle will send the information to the smart contract, but not by the same speed that happened in real life. And here I put an example. If I made a contract with my broker asking him to sell my shares once the share price goes to a certain limit, the fluctuation in the share price might not go through Oracle as fast as it should be. So maybe the share price goes up at a certain time, but by the time Oracle passes the information to the other party, the share price goes down. And this is what we mean by Oracle problem. So maybe Oracle problem, the information will be inaccurate, or it doesn't go by the same speed as it comes in real life. So we need to find some kind of resolution for that. Connecting to online and offline system, smart contract can programmatically control real world assets like cars. And this is what I was trying to explain earlier, that we used to have smart contract digital assets for digital goods and services. But now this try to go beyond the digital side, go to real life assets like cars, lands, buildings. We can sell them by using a smart contract. Oracles act as trusted data feeds, bridging the gap between digital smart contract and real world events. And good example like the GPS that tells the smart contract that the asset has been delivered and now we need to claim the money. The challenge lies in finding decentralized solution for verifying the data. We still need to get some kind of verification. What are the perspectives on the smart contract in the US? Number one is the regulation. We always keep thinking about how we put the boundaries or the legal aspect of this smart contract. This is a huge issue. And don't feel that it can be resolved by one forum or one body or one committee. It needs a lot of study and experience from the computer science aspect, the programming language aspect, and the legal aspect. Legal regulation has emerged for smart contract that resembles securities or activities covered by security law. Why we put it under the securities? Because of the initial coin offering. Because the smart contract will go into the public through the DAOs, it has to be somehow regulated either as shares or as commodities or as digital currency, for example. So this is still a critical issue that needs to be studied. The SEC enforcement action in 2018, which is very recent, the SEC brought actions against both ICO and the smart contract platform, which is the Ether Delta. The SEC argued that these platforms were operating as unregulated securities. So it's a huge issue. what I say here, it is a barrier, but we cannot avoid it. We need to study it. We need to put a contract because this is the trend, and we need to embrace it and find solution for it. Uncertain legal interpretation, while the SEC has achieved some victories, courts have also opposed the SEC assertion that digital assets are securities in cases where the Howey test is not clearly met. So here still it's an issue between the SEC and the courts, but I am sure very soon we will hear some updates about the regulations. So far we talked about the introduction of the smart contract, how it came out in real life, how it was established on the DAOs and using the dApps, who made the smart contract or came up with a smart contract idea, what are the foundations of the smart contract, what are the challenges for the smart contract, whether from the regulation body or from the vulnerabilities or from the Oracle probe. Now, let us take a quick look on the smart contract in the industry today. The developing story here, a smart contract in the industry is expanded a lot, by the way, in the supply chain. Why? Because supply chain covers everything from the establishment of the product until the product is delivered. So the smart contract was able to facilitate secure data exchange and automate payment, streamlining operation. It was very useful in the supply chain. And because it's very useful in finance, where we talk about Bitcoins and cryptocurrency, smart contracts are revolutionizing financial transactions because it makes our life easy. We don't need to wait for the intermediary to provide some kind of approval or put the final say for the payment. They automate automatically. They automate also loan organization, facilitate decentralized exchange of money, and streamline insurance claim. So this can tell you that the smart contract is been growing very fast in different industries. Here, the smart contract in general, it works on the public blockchain, where people, they have a stake in the smart contract and they are able to get a copy from the ledger and try to make exchange of assets and digital services. But it can also happen in the private blockchain. Private blockchain where one company is trusted and can have control over this smart contract. This could happen between a parent company and a subsidiary. They make a smart contract. There is consortium blockchain, which is a hybrid model between the public and the private. What are the applications of accounting? Starting from March 8, 2019, Nomura invested in QuantaStamp, a startup that audits a smart contract to identify and close vulnerability. And then later on, Ernst & Young start to announce a significant investment into the blockchain analyze product, making it accessible to over 100 clients. So this continue. A smart contract was not working in vacuum. It was monitored by accountants and auditors because at the end of the day, it's currency and ledger, which we need to be involved in as auditors and accountants. And this is the reason, actually, we try to embrace it now in our institution to educate our students about the smart contract, because we need our students to be aware of what's going to happen in the near future. Then Ernst & Young, they made an open source Nightfall, their previously proprietary protocols for enabling private transactions on the public Ethereum blockchain. And this allow enterprises to transact privately on a public blockchain. And the Microsoft open source Verisol, a tool for formally verifying, analyzing, and auditing Solidity smart contract. and this came out into exist. So this continue here. A smart contract has been in the market for 5 years. This is, like the if we would like to say, the expansion of a smart contract. But will it expand in the near future? My expectation is yes. And maybe there are some barriers, some hurdles, but soon the regulator and the enterprises will appreciate this kind of a speedy contracts that doesn't need the interference of intermediary. The issue here is, as you can see, those are the advantages, again, in the contract. Number one, auditability. And this is actually, it gives advantage for the contract to be continuously audited by everybody, the level of transparency. But I need to highlight one thing here, that auditors are afraid that they might lose their job. Since the smart contract is audited by everybody in the blockchain, we don't need an auditor. In a way, yes, we don't need a classical auditor, but we need a smart auditor who can look at the smart contract and help the audit committee to make a decision. So the auditors should move from the classical way of auditing to be consultant, to give the decision maker good ideas on how to maximize the benefit of the smart contract. So we turn from the mundane work, the routine work, into a decision-making work. If the contract is automated by itself, this will free our time as auditor to act from the strategic level and help the management and the audit committee to make a right decision. Autonomy removes the need to rely on a third party. We don't need banks anymore. We don't need intermediary that can take a percentage from the contract. Precision, because the contract is automated, we assume it will be free of error and fraud. Redundancy, the documents are duplicated. So if somebody tries to play with the blockchain, the other people on the blockchain will be able to find the difference. What are the challenges of the smart contract? As I said, a smart contract is still evolving and their existence is still premature. But we need to see what are the hurdles and try to find solution for it. Number one, latency, which means most blockchains, they do it on a slower way than, for example, what a credit card company can do. So, for example, I believe the credit card transaction can take up to 20 transactions per minute, but the smart contract might make 8 transactions per minute. The smart contract takes longer time to process than what we use for our credit card. Security, public chain can expose data, and as you can see from the previous slide, there is some vulnerability of unencrypted private data that might have a data leakage to some of the competitors. Immutability, we said it is immutable, but some transactions might not be, as you can see here, it might be reversed, or some transaction can be changed. Transaction cost, which we call it the gas, for every step we make it on the blockchain or the smart contract, we pay fees. So, but each interaction with the blockchain can have a cost, which can add up to a high volume. From one side, which I mentioned at the beginning of my presentation, the smart contract will reduce the overhead because the contract is made automatically. I don't need a person to get a salary to work on this contract. But every time we make a step on this transaction, we pay what we call it gas fees. And this is a cost that will add up at the end. A smart contract can apply to different businesses. And if any business decides to use the smart contract, they need to find answers to these questions. What blockchain system are we compatible with? Is it public? Is it private? Is it hybrid consortium? How dependent are we on the blockchain platform for the smart contract? Are we heavily dependent or we are partially dependent on the blockchain? What are the biggest performance constraints today, which we need to keep it into consideration? What are the main cost driver for setup and ongoing use? how we add up our cost to see how much it's going to cost us. We need, on the other hand, to define the specific business problem that a smart contract can solve. For example, as I said, like dealing with a stock exchange, our smart contract can be good and can resolve the reaction that we need to take for the fluctuation in stock. But we need to know if the smart contract will be up to the speed to do what we want or not. Identify potential risk and mitigation strategy, the challenges that I mentioned, and whether we can find solution for them or not. Select the most appropriate blockchain that can be suitable for us and make implementation plan. So a smart contract, it's good, it's useful, but we need to find the way that very convenient for our company. We need to check the security of the data. I'm sorry if this slide is a bit crowded, but I will leave it for you to read it. We need to check the security of the data, the reversibility, which I said in the smart contract it might happen, and this will be have a negative impact on the smart contract, the future upgrade to the smart contract, and the enterprise software features that might happen. So this is, in brief, the best practice of the smart contract in the industry today. And as a final conclusion, I say a smart contract, they offer a huge revolution approach to the business. It will be self-executed. It will be reducing fraud and error, and it doesn't need intermediary. By leveraging blockchain technology, they enable self-executing agreement, enhancing the efficiency, and so on. So I will encourage you to go through the slides. On the other hand, I thought it would be good if you look at the textbook that we are using in this course. If you go here into page 57, it's actually in a chapter 4. If you would like to see where it is, it's here in a chapter 4. It talks about the smart contract. So here you can see smart contract, background, drill down in the smart contract. What is the side chain, off-chain transaction, how the payment it happens. So I encourage you to go to the textbook to get more details. Also, I encourage you to go to the free course that I told you about in the Linux Foundation. If you go here, I think it's chapter 3, it talks about the concept of the ledger. And this is what I explained, how the ledger accounts happen. And also in chapter 4, it has one section about the smart contract. You don't need to do anything in this course for the final grade. I'm just giving you this course. It's a free course on Linux. You can see the link on Brightspace for that course. If you go here into Linux Foundation, and here, just to give you a quick overview for that, you go to resources, free courses, and here under blockchain, of course, you can stop the video to see where it is, this one. Blockchain understanding its uses and implication. As you can see, it's a free. You can dive into this course and it will give you a good idea about the smart contract, Bitcoin, and blockchains, which I covered in this presentation and in the coming presentations. I hope you find this presentation useful. And if you need anything, please let me know. Thank you. Bye-bye.